All right, so today we're going to be talking about bias and obstacles. And I want you guys to pay attention to this word we call obstacle. Now, I'm not like going to be teaching you guys how to clearly find direction, but I know for those people that have been attending the free content or the free stuffs I've been dropping, they understand how to get their direction based on a lot of models, right? I use so many things to get direction. For example, we use the candle rejection, and after the candle rejection, I use the CRT, candle ring theory. After that, I use the shadow reject. I use the shadow reject. After the shadow rejection, we use the most recent breakouts. Most recent breakouts. I also finally use the KLR. Now, these are the methods I use to make sure I have a particular direction whenever I want to take a trade. Quite all right, and everybody knows. Now, regardless of anyone you are using at that particular time, you need to pay attention to what we call obstacle. You need to pay attention to what we call obstacle. Now, what is obstacle? Obstacle is, for example, you have a clear direction that maybe you are bullish. Let's say you have this as a daily key level right here. Then the market decides to trade down on the H4 time frame, tap on this and give you a breakout. Let's say this is on the weekly. So let me write a weekly. This is on the weekly, right? Then this breakout here on the daily. So we have a daily breakout right here. DBO, right? So we have a daily breakout. Now, after this daily breakout, now any daily key level that you're going to see around here, that the market is now going to trade into, markets decide to trade into this daily key level. For example, this is a daily key level, market will trade into it and give us a H4 breakout. It's an obstacle. This is an obstacle. Your actual direction is what? Is bullish. This is an obstacle that is making the market give us this. So on a normal circumstance, based on our knowledge, we were taught that this obstacle can be traded, that we should, once we have a clear stuff, we can trade this obstacle. But over the years of trading, I noticed something. I noticed that anytime you are trading this obstacle, since the weekly is bullish, we are going to be waiting for the daily to come in line with the weekly. What I mean is, we're going to wait for the daily to reject again and give us a H4 breakout, or give us a shadow reject and a H4 breakout, so that the daily is going to be in line with the weekly. And that's what is going to make the bias very strong. This particular one is obstacle. And the disadvantage of trading an obstacle is you don't know when the daily is intending to join the weekly. I don't know if you understand what I'm trying to say. What I mean now is pay attention. This is a daily key level. So let me write it. Daily key level. This is a daily key level. Quite all right. This is a daily, this line here is a daily chart, right? This one is a weekly key level. Now, you have a weekly reject weekly and a daily breakout, which means your weekly is bullish. So write weekly is bullish. Now, on the daily now, you have a daily key level, daily rejected daily, and this small one is now a H4 breakout. So now daily is what? Bearish. So daily is bearish. I will look for a solution to this particular thing. If someone requests, I cannot type until I accept that particular thing, that particular person. So daily is bearish. You understand? Daily is bearish. Now, what I'm talking about since daily is bearish is now we were taught over the years that we can trade this obstacle because the weekly is bullish. Now, what I'm saying is you don't know when this daily that was bearish is going to turn bullish. It can decide to turn bullish without even respecting any key level. It will just decide to continue bullish. So, trading obstacle is very, very difficult recently. From like 1 year ago, from like my experience of like 1 year ago, trading obstacle before was very simple, but right now you don't know when it's going to join the daily, the weekly. So immediately the weekly now become bullish like this. Then everything is now going to make sense. This is when I would be very, very interested in knocking the lot. Now, another thing I taught my students yesterday, like the project I'm doing that is great, that I want people to also know, is that once you are using shadow reject to get a bias or a sweep of previous daily high or low, is just the name, right? Once you are using it, you shouldn't be interested in trading against the trend. You shouldn't be too interested in trading against the trend, except there is a shadow reject and a candle reject at the same time, a shadow reject and a candle rejection at the same time. Then you can trade, for example, in this bullish environment. Let's say you have a daily key level here. Again, I'm using it as the same example, right? You have a daily key level. Oh God, what's wrong now? You have a daily key level here, and then you have a shadow reject that happened that day, but it taps on this daily key level and it gives you a breakout to sell. Then that is when you will be eligible to take the retracement. But me, remember yesterday when I came live, what was the first thing I told you? A lot of people were interested in selling German 40 because of the shadow reject. Yes, but those of you that attended the live and me, I said, see, one thing about me is I'm not a fan of retracement. Go and watch all my trades. And the thing that gave me the breakthrough was that was stopping to trade retracement. Yes, it increased my win rate so much around 2024, and that is why I don't do that. For me to confidently trade retracement, I need to see a candle rejection, a 4-hour breakout, and what? The candle closed bearish. That's the only reason. But if not, I will wait. Whereas a lot of people, including my students, are busy taking losses. Yes, but me, I will chill and I will wait. Have the rejection, I have the breakout, and I have the candle close bearish. Then I'll trade retracement. But when it is continuation, I don't care. Candle don't have to close. Once I have a breakout, so many things don't need to happen. I'll just need to be a participant. Now, I'm adding to your knowledge of bias. It's not like I'm teaching you guys bias. Now, we're going to be taking one pair and we're going to be going through the weak price action. Now, remember, after you've gotten your bias, what next? I know a lot of people don't do this. They don't give information bit by bit like this, the way I do, but I'm free doing that particular thing. Yeah. So now, once you have your direction, what do you do next? What do you do next? The next thing you do once you have your direction is this. What is that? Now, the first thing you're going to do is it depends on the time frame you have your direction. Now, let's take weekly. Let's say weekly is bullish. Now, all daily bullish key levels are going to be used for buys. If the weekly is bullish, you have your breakout on the daily. Even if you have your breakout on the H4, depending on the model you're using, you're going to be using daily key levels for entry. Yes, you're going to be using daily key levels for entry, meaning any entry you have on the lower time frame, your entry zone must be overlapping with the higher time frame zone, which is the daily zone or the H4 zone. And then the entry must be structure type 1, type 2. God, I'm not accepting this guy. She just go type 2 or type 3. It must be one of the following. It must be. And then it must fulfill the criteria for our entry, which means I have 5 rules I've shared consistently. Those are the rules I follow when I want to take an entry. And that is all. That is all. Once you have your clear direction, remember, then your entry time frame must be overlapping with the key level from a specific time frame, which I've talked about. Okay, after that particular thing, then you need to make sure that you have a structure and you fulfill these roles. And that is all. You don't have to do too much. If it's going to hit your stop loss, it will hit your stop loss. If it's going to go to a direction, it's going to go to a direction. We can do no more about that. And that's the only thing. Now, I'll go into the chart. Like I said, we'll pick a random pair and we're going to go through it. I trade gold and I'm not going to be going through gold because I already know the price action, what happened, and everything that has happened. I have it in my head. So I like picking random pens so that I will show people that this particular thing we're doing works everywhere. It's just you. Okay. And I'm not going to be taking a pair that has USD. I'm not going to also be taking a pair that have JPY. Do you know why? They are very easy. when it comes to this model, once you understand the JPY pairs and USD pairs, they are very easy to understand with this particular thing. So we're going to be going with a very difficult pair. Another thing I also want you guys to know is now I used to tell people that I don't do KLR with RBS. I don't really like RBS except yeah, I don't use RBS when taking a higher time frame key level for entry. What do I mean? I'll explain what I mean so that you guys are not going to get confused. Now, let's say this is the weekly key level here, and the daily drop down and then hits. Once the daily breakout here, I am not interested in this. Why? Because this is the daily breakout right here, right? So we are going to be using a daily key level to look for buys, meaning we have this QM, we have this apex, and we have this OCL that is going to be here. So we can use one of this to look for entry. If you understand the basic doctor system, you know what to do. But I'll bring a but. I'm sorry, I forgot. I should have done this thing with some set of my students. I did it. Now, when you have an RBS like this, there are scenarios you can pick this RBS. Now, which scenario is that? When you have this RBS overlapping with structure type 1, 2, or 3 on the lower time frame, then you're free, extremely free to use this RBS. Listen attentively. When you mark out the RBS and it's overlapping with structure type 1, 2, or 3 on the lower time frame, then you're free to use this RBS. Okay? You are very free to use what? This RBS. So this is the scenario. And also, don't forget, when we are bullish, remember obstacles. Obstacles are going to cause pullbacks, right? When the market hits them, the market is going to pull back. It can even give a change in storyline, which is not what you are interested in because the weekly is bullish. And then you're free to still continue taking a buy. So understanding obstacle will do a very good job for you not to be manipulated. Okay, so that's why when I was around 2024, I used weekly time frame the most to get my direction and do what I want to do. But along the line, I become very addicted to the daily. Yeah, I use daily very well, but still the trend should be the most thing you pay attention to and the highest probability thing. And also understand the difference between markets taking out an internal liquidity and markets breaking out. You understand? Market taking out an internal liquidity and market breaking out. They are two different things. What do I mean? Now, take a look. If we are bearish, or let's say if the market is moving like this, we're in an uptrend. Once the market do something like this, some people are going to see this as a breakout if this is the H4 time frame. Why some people are going to see this as what? A liquidity grab. If people see this as a liquidity grab, then they are going to be entering from here. Quite all right. If people don't see this as a liquidity grab, then people that see this as a breakout are going to look for execution from here to sell. So one of them is likely going to be correct. And we use both concepts. It depends on what happened above here, we are going to be selling. It also depends on what happened here, we are going to be buying. But then, listen to one very important thing. Listen to one very important thing. And this important thing I'm talking about right here is pay attention to this thing that is happening. Now, markets move from internal liquidity towards external liquidity. Now, this is what? An internal liquidity. Remember, what is an internal liquidity? In an uptrending market, every higher low is an internal liquidity. This is an internal liquidity, this is an internal liquidity. In a downtrending market, every lower high, like this, every lower high is a what? Internal liquidity, which is something I've already taught. Okay. Now, for this to be a clean break to the downside, even if the market has hit a point of interest right here, even if the market has hit a point of interest, then the market needs to create an internal liquidity. After creating an internal liquidity, market still drop to the zone, take out the internal liquidity. Then this one is going to be a breakout. Why? Because the market creates an internal liquidity for bearish environments. Yes. See, there are so many things you need to know that are very simple. Then this is now going to be a breakout, quite all right, for you to sell. But if not, without this internal liquidity, then this is an internal liquidity for continuation. So the breakout and the taking out of internal liquidity are the same thing. What do you need? A brain. Understand? What do you need? A brain to just understand where you're at. So now, right now, we're going to be picking a pair, maybe probably a pair like Euro AUD, GBP AUD, GBP NZD, and we're going to be going through the price action. Let's see what the price action have for us. So let's take GBP NZD and let's see. So let's take GBP NZD and let's see what is going on with it. We're likely going to start from here and we brush through the price action. Now, I'll start from the weekly, like I told you guys. Let's look at what the weekly has been doing previously before we move. Now, we have this particular OCL. Now, just take a look at this entire move to the downside. The market moved, this heavy move to the downside, this momentum. Any push up here, automatically for me that I've been trading for some time, I know that there's a pullback, that the market is likely going to still drop because of this heavy momentum to the downside. And we have this imbalance where we know the market is likely going to come back and fill, but not that. Let's do our normal procedure. So we have this little price action, this OCL. Can you see that? Market came and did not tap on this OCL. So the market was coming from this QM, which is one of the high probability zones we have on the chart, right? Market was coming from what? This QM. So what do we have? A weekly reject to weekly. After the market rejects weekly, pay attention. This candle closed below this OCL. This candle here closed below this OCL. So we have a weekly reject weekly. Then we quickly switch to the daily time frame. And once we switch into the daily time frame, what are we looking at? A breakout. Now, this is where the rejection happened, this bullish candle, and then the breakout happened. So we can take this as a breakout. We can also decide to take this as what? A breakout. Do you see that? So this is what a breakout. Now, once the market breakouts here or here, anyone you want to use, let's take this to be more comprehensive, right? This is the breakout. Now, after the breakout on the daily time frame, based on the weekly rejection, what do we do? Every bearish daily key levels are going to be used for sales. The why I use the word every is different. It is not every, but I use the word every so that you understand that, okay, after this thing happened, you should know that most daily key levels are going to be used for sales, except RBS. But if the RBS, this one, is overlapping with the lower time frame structure, then we can use it for a sell. Because if you pay attention, let's cut a little bit. If you guys pay attention, after the breakout, this is how the breakout happened. After the breakout, the next candle deep into this. Look, can you see the next candle came back into the RBS and sell off? So now let's go into the lower time frame and see if this scenario give us the opportunity to use this particular thing, right? So let's go. I gave you guys the scenario today. So let's go. Let's go into the H4 and the H1. So we'll watch H4 and H1 time frame and we'll see. So on the H4, let's go H1. Nothing on the H4. On the H1. Now, beautiful, beautiful. Now on the H1, the price action here gave us that sell opportunity within the RBS. Did you see that? It gave us that opportunity. And then that is what we are looking for. And that's the only scenario I am going to be confidently using the RBS. Now, a lot of people are going to ask what this scenario is. I'll just drop the entry and I'm not going to do too much talking. Does it? Okay. If you understand candlestick structure and you've been with me for some time, you understand this. Very simple. Candlestick structure, sweep of liquidity, break of structure, structural liquidity, market drop back into that, and then the sell started from there. Very simple. And that's the scenario that is going to allow you to sell off of that RBS. Now let's go back into the daily time frame. Now coming back into the daily time frame again, we are still bearish. After the market used the RBS, the market started pulling back. I'm not going to be scared. Do you know why? The reason I'm not going to be scared is that each and every one of us know that this particular RBS, this particular pullback is compulsory. And why is it compulsory is that RBS is not where we are always taking our trade from. Yes, we are more interested in QM and what Apex is based on the basic doctor system. Right, all right. Now, what do we do? Okay, after that, I'll mark out the QM fresh, which is what one thing I will always do. And then what? The Apex. Now I'll go into the H4 time frame. I'll look out for, okay, is it fresh on the H4? Then I'll refine it to an area like this one. Look, it has been used here, so this is going to be where I'm going to be refining to somewhere here. Then the market did not come back to that particular zone. Now, let's go back to the day. It's not like the entry is gone. No. When the market came all the way up, market rejected from a certain key level. This, after rejecting from a certain key level now, we now have, this little bullish movement. It is the obstacle listing. That's why I'm here. Look at the OCL rejected. Let's go to the H4 time frame. We all know that the weekly is bearish. On the H4 time frame, what do we have? A breakout. After the breakout, what do we have? An entry. What's this? Internal liquidity, something I've explained already. And then what do we have? The QM, basic doctor system, entry. Boom. We go to the upside. We trade to the upside. This is you trading an obstacle. Putting it and bearing it in mind that we are what? Bearish. Yes, all of you know we are what? Bearish. The market dropped into this. This line here was on the daily time frame. Remember, daily rejected daily. After the daily rejection, on the H4, we don't have a breakout, so we can use the H1 to move forward for a breakout. Now, after the market come, the rejection, and what happened right here, the breakout. Now, after every breakout, the QM, the apex, can be used for sells. But remember, they need to be overlapping with the H4 key level. Another very important key factor I've been explaining. Then we also come, drop into this. After the breakout that happened right here, we have apex, which is an engulfing sell. So this entire zone is where we can use and sell this entire apex. Then you can go into the H2, H1 time frame to refine that zone into an area that makes sense for you to use and sell. Okay, so I would likely be missing this entry, and I will tell you why. This is what, and then H1 that rejected, H2 that rejected H2, but this is not an engulfing sell candle. So let me show you the H1. So it depends. It depends. Anyway, it depends. This is now going to be your entry to continue that sell. Now, what happened? Let's go back into the day. What you need to know is this is a weekly reject weekly, a daily breakout. You are bearish. This is an obstacle from the daily that started a storyline, but you know that you are bearish. That's the same thing that happened on gold on Monday. That guy, remember that guy on TikTok that said I made him cancel the meter because I'm saying it's bearish, it's bearish. I was like, bro, chill. Did gold sell or not? It did sell after the buy. Why? Because any obstacle is an obstacle. The actual direction is going to be the actual direction. And then that is what happened. The obstacle on the daily, but the daily still have to continue that movement. And then the next day, what is going to happen? Just look at this entire price action. Let's look at this entire price action. Look, after the rejection from here, market gave us a 1 hour breakout, and our entry is going to come from this based on KLR. Simple. This is where our entry is going to come from the daily time frame, because we are on a weekly bearish storyline. So all daily bearish key levels are going to be used for sells, and that's why the sell came from here. The sell came from here. Quite all right. Another sell came from this. Quite all right. Using the previous daily high as liquidity. So a shadow reject occurred here, and then the sell came in. The market gave us another obstacle. This is an obstacle. Don't get it wrong. Still push to the upside and still drop down. Market keep using what? Daily bearish key levels to sell until the market hit another obstacle. And then gave us a shadow reject for retracement again. Then after the shadow reject, another temporary storyline started. Now, this one is not a temporary storyline. It was actually a storyline. Now, let's go into the weekly time frame. Let's go into the weekly time frame. Can you see that? This is what I just talked about. This was actually a story time. This is it. Weekly rejected weekly. You come into the daily. And after that, you have a breakout, a comprehensive breakout here. So this is now actually a change in storyline for you to buy after capitalizing on this entire sales. Did you see that? Then this is another opportunity for you to buy. Now remember, any sell here, it's what? A retracement. I'll put that at the back of your mind. Any sell this time around is a retracement, even if it rejects from a key level. It is a clear-cut retracement. And then the market drop down. You have a shadow reject, which is going to allow you to use the H4 time frame. Quite all right, but this is on the daily. And all daily bullish key levels are going to be used for what? For buys this time around, until proven otherwise. And when the market pull back all the way up to this particular QM. So what do we have? A sweep of liquidity, a break of structure, a structural liquidity, and the QM, and then the sell now started. Now, This is now the internal liquidity, and this is now the external liquidity. And that's why the market targeted this low after taking out the internal obvious liquidity, right? And that's the same thing I just explained. That's the same thing I just explained. What I just explained is exactly what happened here. Let me draw it out for you guys again. I said if the market is bullish, look, the market was bullish from here. But if you take a look at the weekly, this drop is one move. But this time around, the market was bullish. The market was bullish. The market being bullish came down and broke out here. But this can be a market taking out internal liquidity if the market did not create another internal liquidity. I've said it. People can start buying from here based on their point of interest. After market take out liquidity, then this is going to be their liquidity. Quite all right. But the fact that the market create another internal liquidity, drop down to take them out, then this is clearly bearish. And that is the exact drawing I did. And this is how the market presented it. So a lot of people confuse breakout with internal liquidity. It depends. And that is why, to be on the safer side, trade with confirmation. And also remember, there's another pattern of getting your buyers that I taught, which was what? Daily reject daily, daily breakout. So this is it. Daily rejected daily. Daily gave us a breakout type 2. Immediately this one happened, you are clearly bearish. Daily rejected daily. Daily give you a breakout type 2. Now what are you now paying attention to? Your range, don't forget, you are trading between this to this. That is the only thing. I'm not interested in this anymore. Why? Because you have a breakout type 2. I've already explained it a couple of times. If this is your daily key level and on the H4, the market came like this and give you a breakout type 2. Once you have a breakout type 2 here, remember, we are not interested in RBS. Your entry is just going to come from here. You are not too interested in this, but that doesn't mean the market is not going to come to that place. It doesn't mean the market is not going to come to this place. But we are not interested because we have not seen the market go there most of the time. Most of the time, it's staying within the newly created what? Apex. And that's the same thing that happened here. Daily rejected daily. Daily gave us a type 2 breakout. Then we're going to be selling from here. Where? This Apex. You go into the H4 time frame. That's when you start investigating that particular what zone. Which one time frame? You now look at, okay, is there an entry zone that happened right there? This is where the market pulled back to. Was it this? Yeah, this is it. But you don't have a clear entry because me personally, I'll be looking forward to a zone like this. Right here. Okay. So, okay, quite all right. Okay, there's an entry here. Okay, I just saw that. Sorry for that. Okay, what is this? Another 14B. Did you just see that? H1 rejected H1, H1 into an external breakout, giving us an internal liquidity. It makes a lot of sense for us to take ourselves from here. This is our sell. Did you just see that? And this is now an entry for that. And then it started pouring down. So please, when establishing your bias, pay attention to obstacles. If you're not paying attention to obstacle, you don't even, because obstacles are, see, there's always going to be manipulation on the chart. There's always going to be manipulation on the chart. And the fact that there's always going to be manipulation on the chart makes it clear and clean for all of us to pay attention to that manipulation so that we are not going to be the ones that are going to be manipulated. Okay, now people that took the trade here, they're going to definitely get some profit. But since we have a rejection and a breakout, us we wait and the market gave us what we're looking for and we use the opportunity to sell. Did you grab that? And that is how we go back into the daily time frame again, and you see that is how we've broken down from here down. All these daily key levels, I think when we go into the lower time frame, you see the sells. You definitely see all the sell and the entries. When you see this drop down, market still drop down to this. Now the weekly is bearish because we have a daily reject, daily breakout. For us to start buying, we need another word. A daily breakout to the upside again. If not, you're not going to buy. You're going to keep looking for sells. And all bearish key levels are going to be used for sells. Look at this. Sell, KLR here. Sell again, or sell, KLR here. But then, once the market gets to a certain zone, for example, do we have a rejection from here? Okay, let's look at the weekly. You can see the clear change in storyline right here. Okay, now what do we use here for us to have a clear change in storyline? We have the most recent breakout, which means the market gave us the most recent breakout on the daily right here. And this time around, market used what? RBS. Now, there are times I use RBS, which I said it must be clear cut, clean, overlapping with what? Structure type 1, type 2, type 3 on the lower time frame. So let's go to the H4. Oh my God, this is it. Oh God, did you just see that? This is an RBS, which is an engulfing field. This is our internal liquidity, and look, it was clear-cut overlapping with that. Then this is a structure type 3 for you to place your limit order straight and go for a continuation entry. Did you see that? Right, so that's it. But if I don't have any structure around here, then my entry is going to come from likely this place, this QM, and then I'm going to be looking at this as well, internal liquidity. But since I have this, but what I want you guys to know is my entry always comes from the higher time frame. My entry level, not like the structure or everything I'm watching, but the entry level for me personally always comes from the higher time frame, which is always what I do. My entry level always comes from the higher time frame. Okay, so now on the daily, we are bullish. That is what this information is all about. Right here on the daily, we are bullish because we have a daily breakout. So all H4 bullish key levels are going to be used for buy. So this time around, we're looking to the H4. All H4 bullish key levels are going to be used for buys. Then we're going to be paying attention to all H4 bullish key levels. There's all these ones are going to be used for buys. Right? The same thing goes to the daily. They're going to be used for buy. So for example, now let's take a look at this RBS. Again, try to use RBS. So if this RBS here is clear-cut overlapping with the H1 structure that makes sense, can you see that? Then I'm using it. Did you see that? Key level that got tested, disrespected, overlapping inside an imbalance. So this is our liquidity, internal liquidity. This is your inducement. Don't forget. And then your buy. Did you just see that? So when we say all H4 key levels, it means the ones that make sense. Meaning you are clearly ignoring this because this doesn't make sense. Go to the H1. Did this OCL make sense? No. What is there? Nothing. So you're not paying attention to this. You are paying attention to the ones that make sense. It doesn't mean, that's why I said anyone that doesn't make sense, please let it be. We are paying attention to the ones that make sense. And don't forget, I don't like using the lower time frame. For me personally, trading, I use only the higher time frames. The least time frame you go to when you're learning to trade profitably should be the 1 hour time frame. Going below 1 hour will make you contemplate a lot. Okay, so understand the concept behind your buyers, your clear-cut entry, and so many things. For example, now this is a model 4, something I know that confuses people a lot. Now this is a model 4, but if I said immediate RBS, a lot of people are going to ask, immediate OCL, why not this? I explained the scenario where the market can ignore this. The market can still decide to ignore this and go to another OCL. Because that was the OCL that makes sense. The rest doesn't have the characteristics I said for a 15-minute break of structure, liquidity, and the entry. If it doesn't have this on the 15 minutes, like for example, this, let's go into the 15. I know it will definitely make sense because it played out. Now, correct. Did you just see that? Just look at the entry here. This have a break of structure. The internal liquidity I just draw and the entry. It must look like this. If it doesn't look like this, then sorry. Sorry. It's not a zone you can enter from. Okay, so I think quite did a lot today for you all. I'm just teaching my stops at random, but when in my classes it's not random like this for those people that have been there. I just teach stops at random. So I think I've given you guys a lot of things. Like any pair you go to, once you are doing it correct, it's going to give. But I also believe that there are some pairs that work more. For example, gold. Gold is something that just rejects fast from key levels. Whenever your key level is correct, if it is correct, the gold is going to quickly, sharply respect that particular key level and quickly move to a particular direction. So gold doesn't take too much time to respect what particular key level. It quickly respects that particular what key level. So and other pairs too. Okay. So once you have something like this, now we have a daily reject daily and a daily breakout right here, or we have the most recent daily breakout. Now this move down shouldn't scare you. That's what I'm saying. This move down after this rejection, daily rejected daily, and we have the H4 breakout, for example. If you have H4 breakout below here, you shouldn't be scared. Why? Because you have a daily most recent breakout. So you are bullish. Then your entry can even come from here. From here, for example. Why? Because you have a structure here for me to take it back. And that's why the entry can come from that H1 time frame I just marked out. Here, here's the entry. And see that liquidity was there. Why? Because